Hi, and welcome to the Special Situations cast. My name is Bram de Haas. I run the Special Situations report, which you can find on Seeking Alpha. Before we jump into the interview with my guest of today, I want to make a few things clear. Nothing on this show is investment advice. It's for entertainment purposes. Either me or my guest may have positions in any stocks or securities that we discuss. So keep that in mind, and please go and enjoy my interview of today. I recently interviewed Svenda already on this podcast, and he's put together an interesting resource with his formerly known as the Svenda manual, which covers a lot of the over-the-counter stocks. And this is essentially the modern day equivalent to Walker's manual. And in this publication, he has collected a lot of very hard to get data on these companies. Jan also writes a periodical for Seeking Alpha about short selling, hosts a podcast about short selling, and he's a contributor to Breakout Point, which is covers short selling. So last time we talked mostly about short selling, but this time we're going to dive into the microcaps. He recently launched a new version of his manual together with a team, and this is called the over-the-counter database. And I'm very interested to learn more about it. And Jan also has a few microcap opportunities to talk about, so that's great. Hi, Jan, welcome.
Hey, welcome. Thank you very much for having me again.
Did I introduce you correctly?
Yeah, for sure. Yeah, for sure. It's been an interesting couple of months, so I'm happy to share the new developments as well as two of my ideas in the OTC space.
Yeah, I've been curious what was going on. You've been on the show before. You're the first return guest, actually. For people that missed the last episode, could you tell us how you got involved with investing?
Yeah, well, and actually I thought about that question a bit before, and the first stock that I actually bought was through my dad when I was about 12 or 13, and it was Electronic Arts, which was like before the financial crisis, and I used to play quite a lot of computer games, and I thought, well, why not? EA sounds great. Of course, it was
do you still have it?
Terrible. No. Actually, no. I think my dad sold it when it got back to the levels around when we bought it, but it took a long time to do that because actually we bought it around 2006-07, and then it crashed and it never really recovered until I don't know when,
a few years ago.
Years back. Yeah. So that was my first actual investment, but then I got in touch with the market a lot more when I was around 18 and so on and so forth, and just got into investing through the usual channels. And then I kind of read about value investing and did a bit of investing on my own. And then I went to study at University Economics and Finance in the UK, and I got into finance professionally with, I was in Morgan Stanley for a bit, and London, where I was for a year. So that kind of got me a lot more into research. But then I kind of decided to be independent because I was just interested in a lot of these micro caps, nano caps, OTC stocks, where of course most of the institutional investors don't go because of the liquidity or craziness, whatever obscurity they don't really they're not really accustomed to. So I became independent, and then I started to be serious about my research because I ran a newsletter for the OTC investors for about 2 years, and now I kind of spent most of my time short selling, but I still take care of my OTC positions, and I still track what's happening in the OTC market just because I have so much information about the companies on the market there.
So do you mix those two in your portfolio, or are you really mostly focused on the short selling?
I mix it a bit, but in the OTC land, like I still do some research because I, for example, released a new version of the research that I done in the previous years and so on and so forth. But I do spend most of my time short selling. But I still, I mean, let's say, I don't know, 70-30 sort of split. And I also hold some, SPY just to be quite sure
Oh,
with
okay.
everything. So yeah, I don't, yeah, if I do active research, I just try to be a bit more concentrated in what I do, which is short selling now, but I still hold OTC stocks as well.
Cool. And with short selling, you diversify quite a lot, right? You don't.
Yeah,
Yeah.
for sure. Yeah, it's a bit small, a lot of smaller positions. I think that, yeah, since I'm doing research, but it's kind of trying to track what others are doing, what our other campaigns are out there, and so on and so forth, which can be really great to a point, but you have to be diversified unless you do really your own research about one name and you are very, very confident that it can. You understand the catalyst and you understand what could drive it down. But that's for sure something. But for the OTC space, I of course do my own research all of the time, and just given the amount of information that I have, it's kind of always going back to the
Sure.
names
You
that I've known
you
before.
you really built that over the years.
Mm.
But maybe before we get into the the database that you've launched, can you maybe explain what the OTC is and what OTC stocks are? Because I think not everybody who will listen will know.
Yeah, I mean, OTC stands for over the counter, and over the counter market was basically established for smaller companies who wanted to go public but didn't want to go through the IPO process. Of course, nowadays, companies don't really usually use OTC market as some sort of a step up process before the IPO because of specs and everything and so on and so forth. But back in the days, it was used, for, let's say, a small amount of capital that the company needed. They went to the OTC, they raised the money from, smaller investors, and then they would just be quoted on this OTC market, which is, let's say, differently regulated than the SEC, NASDAQ, and YSE. Although some companies do report to SEC, or quite a lot of them do report to the SEC from the OTC markets. Still, it's a bit different. And I mean, it's kind of a forgotten market to a certain degree because not many people really go there. It has a lot of bad reputation for penny stocks and so on and so forth. I mean, people usually, mix the two between penny stocks and OTC stocks because it's kind of similar, because a lot of the stocks are trading around $1, $2 or whatever. Although there is one for $180,000 if anyone wants to supply some cash on one OTC company as the highest priced. So there's a bit of a bad reputation and so on and so forth. So people don't really fish in that pond too much. But if you get into it, you actually understand that there is a healthy market and companies that make sense. What I call meaningful companies, basically where the investment opportunity can come at one point or another, and quite a few people that look into the stocks as well. There is a community of like 100, 200 maybe people that are active on Twitter, or less on Seeking Alpha, but mostly on Twitter, that kind of follow the situations in the OTC stocks. Yeah.
Oh, you think there are about like 200 investors that are actively, on Twitter monitoring the OTC?
I mean, yeah, it would be like, I think from one time to another, I think certainly there would be a lot less that are super active, like Dave Waters and so on and so forth. He's a fund manager, for example. That might be like 10 to 15, but then overall, you kind of, once you get in, you start to understand, the people around. And I think that, like that's a relatively fair number of people that have been publishing something or kind of like were somehow involved with one of the other stocks. I think that's, my ballpark estimate, like 100 to 200.
And in my impression, I think the community you reference is really mostly quite experienced investors who've been doing that for years. And it's not because on Twitter there's also all these, like, I think they're pump accounts or something They're like
Yeah.
they throw out like 20 tickers and this going to
Yeah.
the sky or the moon, and that's something completely different. Uh,
Yeah.
People probably should avoid.
Yeah,
Um,
definitely. That's where the bad reputation from the OTC's market comes from. Anyways,
yeah,
guys like
because
Timothy Sykes
it's
and stuff like that.
I think it's part, yeah, partly deserved because there's some stuff like that going on, and the regulations
Yeah.
are a little bit lighter and less costly, because I think there's also like companies that kind of fail in the larger markets, and then slowly they are faced with like they make 1 million in profits, but it's all going out the door to the um, people who do the compliance with the SEC, and so they downlist, right?
Hmm.
Yeah, and then they sometimes get really cheap. So it's very interesting.
Yeah,
Um,
it can get interesting for sure.
so let's see. Thanks for explaining that. And yeah, why do you think the companies that are trading there, the better ones, because you're mostly interested in the better ones, why don't they just uplist to the New York Stock Exchange or the Nasdaq or something?
I mean, it depends on what good or better means in given context. But a lot of the times there is a few companies that grow, that sometimes grow meaningfully. There are a couple of examples which was a sleepy OTC stock, and then they suddenly transform the business model and start to grow, and that is kind of like you see less that, a lot less growth. So these can be family companies that are just not going to grow much. They're going to, maintain a good piece of their business. But there was this company that got bought, I don't know, 2 years ago, which was dealing with candied fruit in the US, and basically all of their or most of their sales kind of came during Christmas, because everybody was doing the Christmas cake with the candied fruit, and they had like a monopoly almost over the candied fruit market in the US, and that's just not going to grow much. I mean, their revenues have been like virtually flat. While there was an investment opportunity, so that was a good, OTC stock or a meaningful one, but it would just not uplist because it would cost them more money, and they are not growing much. So I think for a lot of the companies that are there, they're just not growing much, and that what prevents them really from uplisting. That also means that there is like a smaller amount of opportunities, just because the companies will eventually be bought out, and will happen with them. They will sell something, some part of the business, or they will release a huge dividend, and so on and so forth. So actually, the opportunities in the OTC space usually are driven by hard catalyst like acquisition, some sort of dividend, or some sort of change in the business, but not necessarily growth. And that's why the uplisting is not really that usual, I'd say.
Right. Okay, I understand. And if you say dividend, are they paying like sometimes real large dividends, or is it like a one-time dividend that suddenly you get like half your money back?
It could be. I mean, in some of the cases, certainly people are looking for those one-time special dividends, which come from, for example, sale of land or sale of factory or something like that. So money coming back to shareholders. That certainly can be one catalyst, but also, of course, ongoing dividends. I mean, and today I'm going to be talking about one of the, or they're both actually paying dividends. The one that I'm going to talk about, but the other one is known for, really giving dividends worth 15 to 20% of the market cap. So the dividend yield is very, very, very strong
A
sometimes from time to time.
15% dividend.
Yeah, 15%.
Wow. And that's
Yeah,
sustainable, or
and
that's they're eating themselves?
yeah, I will explain that. I'll explain the
Okay.
situation. And of course, there's a lot more to it.
I want to
But
skip
for
ahead
example, like
now.
but also, for example, from the dividend place, go to Mills Music Trust, MMTRS, who haven't read my 2 articles on Seeking Alpha, please do that. That's a great example of a dividend yield player in the OTC space, which just has been forgotten. And there, the dividend yield was also 20 to 30% a year
Yeah, and
in
a
given years.
very
So yeah.
interesting asset class to have music royalties. It's very undiversified.
Yeah.
Love it. You talked about it maybe last time on the
Maybe I
podcasts?
mentioned it. I think I like to mention it. I mean, I still own it, and I think it's now the share price is up a bit, so it's not as easy to get a meaningful dividend yield. But still, tracking the stock is really, really worth it, in my opinion.
Okay, cool. And yeah, but I can't imagine that lately these OTC stocks have been doing great, and you can just buy Apple, Microsoft, Facebook, Amazon, and you're like up 250% in 5 years. Why should people really bother going to the OTC?
Yeah, I mean the pitch is that if you want to do your own work and be rewarded for it, I believe the OTC market can be really nice. There is a lot of different research process, and you have to be kind of knowledgeable about it a bit. And of course, it is not the same as buying Microsoft, Amazon, or Facebook, because you can just sell those whenever and so on and so forth. Here, sometimes the liquidity can be different, and just the whole nature of the situation can be a lot different. It can be legal situations or something like that, or music royalty trust. You don't really the public market such as YC or Nasdaq. So I think if you do your own work and are kind of comfortable with the research, it can really bring you the same performance. Or there are certainly situations where you can find the returns that have surpassed the fangs and so on and so forth. But it is based on your own on your work. Of course, buying an ETF doesn't hurt either. I'm not completely against it, to be honest, because I think that, of course, chasing return is hard. And if you're an individual investor, you want to make sure that you have some sort of edge. And having edge in the public market like NYSE or Nasdaq is just nearly impossible for a small investor. So I think OTC market actually deliver that edge, because you can really understand the situation pretty well. You can do the research. It's not really some sort of complicated research where you would be trying to forecast the next 5 years or 10 years, but more like understanding what's going on, actually what's the stock about. And if you figure that out, that can lead to investment opportunities. So I think in the OTC market, why bother is because you can do the research, you can find the informational edge. But of course, yeah, I mean, you have to kind of know your time limits and know what you're looking for, and if ETF is going to be better or not for that. But it's worth it.
I think it's a great point that you can have like an edge there, and you have less competition from like fund managers because it's just too small. And
Yep.
so it's a great pond to fish in. Yeah, something. Let's see. Can you maybe give some examples of companies that you found on the OTC, or maybe like the dividend ones
Dividend ones.
or other ones?
There's
Just
the
examples.
there's MMTRs, which is really the most interesting ones. Other dividend yielders apart from the one that I'm going to be talking about today. Nothing comes into my mind. Maybe I'll think of something.
Okay.
There is the Pine Lawn, which actually there's a company that owns a graveyard in New Jersey and pays dividends. So you can for example own that. That's more of a like obscure situation rather than that. But for example, other companies, I mean, you can find growth
That's
stocks.
Pine Lawn Cemetery, and it owns like a graveyard in New Jersey or New York.
Yeah. It's like somewhere in between New York and New Jersey, and they just basically sell the lands, and you get the proceeds from the sale of the lands.
Yeah, and it doesn't grow, but it's a sustainable business,
So
unfortunately.
yeah, unfortunately it is sustainable. So that's like one obscure dividend yielder that is there. But otherwise, I've mentioned there are not many growth stocks, but actually recently there was one big one which was kind of notorious around the OTC community, which is FarmChem, which is PCHM. PCHM, yes. Have you heard about it or not?
Not sure. What's the name of the company?
FarmChem. It's like a company that does drug testing sweat patches. So they just They would create these patches which work with your sweat, and they would then tell whether there are some residual drugs in your system or something like this. It's like a drug testing product.
And they found some COVID
And
cure.
this is no, but they've been using more and more in terms of the product now. And this was like one of the great growth stories, because in past 3 years it went from like 40 cents to $4. And that was like, I knew
That's
about it
better
when it
than
was
a 15% dividend.
that was easily found. You could find out about it when it was like 50-60 cents. I knew about it since then, because that was a classic case of like a company that reports very weirdly. They don't report to the SEC. They report only on their website. And on their website, they only share like really few lines of the financial statements. But you can find a company being referenced in courts and so on and so forth. So of course, it's been used in the legal process to make sure, that people are, for example, free of drugs and so on and so forth.
Right. So you were saying, and they're referenced often in court, and I was like, yeah, that's going to buy that stock.
Yeah.
Can't wait.
Yeah.
So they're
So that
still growing, and it's still attractive, or
kind of, yeah. I mean, for example, I mentioned Dave Waters, who's like the OTC fund manager that the most people know, who runs Alluvial Capital. They have like 4% of the fund inside the company, which is it's a 22 million market cap. So he owns, I think, a bunch, I guess, of the stock. And I think if you have a big fish like that on your side, that it's probably easy to be long, just because they have to scoop up the shares and you have a natural buyer. But that's been really interesting. It's been growing a lot now, and there are some opportunities now due to the COVID, not necessarily regarding the infection itself, but just because it was used more and so on and so forth. And and as I said, like, they report relatively weirdly. They reported once a year on their website, but they were always reporting with a huge delay, like 8 months, 9 months. So basically, you really had to wait a long time to actually see what has been happening last year. But every time they were reporting like crazy net income figures, and it was really, really undervalued on the PE. And you could find that it's like a legit business and so on and so forth. And they had a lot of cash on their hands, and the margins are like, I don't know how much it was, 20% profit margins, net income profit margins, yes, because also they had some deferred tax assets and so on and so forth. So they were really like utilizing a lot of that, and it was great growth opportunity. And now it seems like, well, if Alluvial has 4% in the stock, or of their portfolio in the stock, I guess there might be some further opportunities. Although I did sell already of the stock, because
you're referencing,
maybe there is more, but I want to lock in.
Yeah, just for the listeners, you're referencing Alluvial Capital and Dave Waters, and he's been on a podcast too. It's super interesting, so definitely check that out. Let's talk about your database, because you've built a database with hundreds of these companies, and aren't they just in screeners? Or why did you build this database, and how is it useful to me if I want to invest here?
Yeah. Did it just drop?
Yeah, we just lost you for a second.
Okay. I'm back. I should be okay, hopefully.
Yeah, that's great. Did you get my question?
You just mentioned Alluvial, and then I lost you there, but
that's where you lost me. All right. Well, I was wondering, you've built this database with hundreds of OTC companies, and aren't they just in screeners? Or if I'm interested in this market, why do I need your database? And what can it do? Or I'm just curious.
Sure. Yeah. So the database is basically was culmination of my efforts in the OTC market, because I ran the newsletter, And the newsletter was basically focused on going through the market and finding these meaningful companies. So I was, of course, focused on finding long ideas like
But I can't
PCHM
just
and others.
use like a screener, like I don't know, I don't use screeners. I don't, maybe Guru Focus or a screener like that.
The OTC market is specific in that a lot of the data sometimes is hidden or is misrepresented by the screeners. So of course, if it's a company that is reporting to the SEC, you can find it in the screener, right? Every screener has that. Even Bloomberg has some of the OTC companies that are not reporting to the SEC. So
Even
you can find them, you can screen them.
Oh, sorry.
Huh? No. Just like Bloomberg, because Bloomberg has some special data, like the terminal itself has some special data. So some of the companies that are not reporting to the SEC, you can actually find info that you would not normally find on a screener.
Oh, okay.
So there are ways to like broaden the screener on the OTC market, but the thing is that there's a lot of opportunities to be misrepresented. Either they have a volatile performance, or it's older data and you have to adjust it somehow, and so on and so forth. So the screeners are kind of unreliable, and also the SEC reporting companies are usually not as interesting. So there's about 7,000 OTC stocks. I'm not sure how many of them report to the SEC, but it will be a large number of them. And a large number of those SEC companies are shells or just dubious businesses, and so on and so forth. And so the whole idea of the database is that once you get access to it, you have the access to the OTC market, and you can find the meaningful companies, or 95% of the meaningful companies in the database itself. So
right.
if you're interested, and you want to start researching, that's the best place.
So otherwise I would have to go through like thousands of filings and like look through them and see if it's interesting, discard it. And this is basically a shortcut, and I immediately get to, how many companies do you have?
400, around 450. So as I said, it's 7,000 stocks of market, and you can screen it, but yeah, it would take you a long time to get to those meaningful companies. While with this database, you can just get access to it instantly, and you can see some data regarding the stocks, even when they are not reporting to the SEC. So we manually adjust the data, we manually get the funds, so on and so forth. The split is like 450 companies, maybe 130, 40 is gray, which means like they're not reporting to the SEC, but they're releasing financials somewhere. A lot of times this is kind of hard to find as well, or you have to be kind of like Googling around. There is about 100 community banks. So community banks is a specific subsector in the OTC, and I've selected kind of the most interesting ones. And then there is about 100 SEC stocks, which, are, again, Mills Music Trust you will not have them on your screener because they don't report the usual revenue net income. They report royalties and they report distribution. Example that you cannot do that. It doesn't screen well. And then you have dark companies. The rest is like companies that do not report. And for a lot of those, we have found financials.
Oh no, so let's get into that, because that's a super interesting subject. It's the dark companies. What's a dark company?
A dark company is basically a company that does not report to the SEC and does not release the financials to the shareholders in a public manner. So you can't find the financials anywhere else. But if you request it from the company, or they send it to you as in post, every year or so. Yeah, or fax. It's the older the technology, the better for the OTC market. So.
Okay, so I can't find financials anywhere. So, and then I phone them up and they send them over to me.
Yeah. Sometimes the process is not as easy, and sometimes the company will be like, no, you have to go through some legal hoops and so on and so forth. They sometimes might force you to sign a non-disclosure agreement saying that, okay, we're going to show them to you, but you can't show it to anyone else, and so on and so forth. But a lot of times it's kind of relatively easy in the sense that you just reach out to them, you confirm that you're a shareholder, and that they would show you the financials actually.
Wow. So sometimes they're really trying to keep you out of the door.
Yes, definitely. I've been I've been calling up some of the management teams who have been hanging up on me quite some time. So yeah, it can happen. It can happen.
And why do they want to buy up the shares themselves so they can have those 10 beggars that you referenced earlier, or why are they so unfriendly?
They're usually family companies who just don't want to be bothered by anyone because they don't want to define themselves as a public company. So, of course, as a public company, you have responsibility to the shareholders. However, if you run a company, for the benefit of the family, you don't really care much. You just released some shares 4 years ago, and now some guy tries to come in and tries to say, hey, but maybe you could release the financials, maybe you could, do this and that. They don't want to do that a lot of times. So they lawyer up and try to shut the shareholders, which usually means that there is something interesting, or at least there's a potential to have an interesting situation there.
Oh, and if they're run like that, do they like often like, I don't want to say steal, but like pay themselves a little bit egregiously or things like that?
Yeah. I mean, last time I mentioned life insurance company of Alabama, which was a stock that is now undergoing kind of like a proxy fight, sort of, where shareholders are trying to point out that the compensation is not great. There is some self-dealing and so on and so forth. So there is the corporate governance risk that you have to account for, and you have to be kind of ready to deal with it. It's not all the times, but of course, if it's a company that doesn't want to release the financials, sometimes they're really not that friendly to other shareholders, and there might be self-dealing idea for self-dealing. But a lot of times it's just really a old family company that doesn't necessarily need to release the financials and so on and so forth, and just kind of keeps on doing what they were doing before. And not all of the time it is so unfriendly, but corporate governance is certainly one specific risk in the OTC market. Yeah.
Okay. And a lot of employed family members, I'm guessing, things like that.
Yeah, exactly. Business ventures that are just dubious, spending money on some stuff that just wouldn't make sense. There is a company that owns a bunch of real estate, and they basically do like a kind of like a straightforward operations, but then they suddenly like got into bottled water because the son wanted to try it, I guess, of the family owner and so on and so forth. So it was, and they just burnt money on it basically. And they had to sell some of the real estate, which was like showcasing how undervalued they are because they sold it at such a huge profit because it was depreciated. That's Impresso, ZCOM for anyone interested. So yeah, that's another example of like relative dubious corporate governance, but that can also like showcase how undervalued it is.
Sometimes like the terrible corporate governance unlocks the value. Like
sort of. I mean, it also burns it. But certainly they have to register the net income or the profit on the sale, right? And then you can see, they've been holding this factory for I don't know how long. So yeah, that's basically it. Of course, that they then showcase that they're really holding something valuable.
So I think it's really cool. You added your financials that you have for these dark companies, so people don't have to get yelled on the phone and issue legal letters and I don't know what to get them. Are you still adding companies, or did you pretty much pick over the entire market, or are you just waiting for companies to fail on the New York Stock Exchange and move back down?
No, actually, there are a couple of ways that we are doing this. I'm working on this with David Flood, who's a OTC investor as well. He's very prolific on Twitter, so you can follow him there. And he has a blog as well. Yeah, and
great. I hope to get him on a podcast in the future.
You should certainly. And so basically what we do with David is that we track the OTC market in some ways. Like, for example, if there's a SEC form that is announcing delisting, we would notice that, and so on and so forth. So there's a lot of ways to track the market and to make sure that we have most of the companies that we can have in the database and that we believe are meaningful and could be investment opportunities. So we keep on adding. Of course, since I did most of the work, of course, the large bulk is now there, but we keep on adding, 1, 2, 3 stocks a month or so. It can even increase. It just depends on what we find, but we are still adding stocks to the database itself. So again, if you buy the subscription, which is for a year, you get the research that you can already start doing, and also you will get new stocks as they go on, and new features as well. We recently added PEPS, so now we have like 3 fundamental ratios that can help again to navigate also the database a bit more.
Yeah, that's on what kind of metrics can you search your database? Because you got quite a few.
Yeah, I mean, we tried to basically add the ones that are the most relevant. Of course, this is not like a full-blown screener where you can track for anything, but I don't think that that's not necessarily really because the stocks themselves should be interesting. So essentially, one stock, you can go with the database one by one and you will find probably something interesting. But we did add 3 ratios, which are kind of going to help you if you are focused on some specific situations. We've added tangible book, so for the guys that like to value assets and so on and so forth, you can search for the ones that are trading
Yeah,
below
I
1.
like it, but it doesn't make money.
Yeah. Yeah. Once in a while, you hear about the story that makes money, and then you got hooked in it. But so yeah, that's a tangible book, and then PEPS, basically just to kind of showcase what's been happening in the operating business, and that can also be quite indicative of what the value could be. PE especially is helpful in the OTC space. You could add free cash flow, but free cash flow needs a lot of adjustments, so we didn't do that. But I think these 3 are completely enough to be able to sort through the database a bit more, and maybe you can dig into the situations that you are comfortable with a bit more. So let's say you are relatively new to the OTC market, you can start with the usual PE, low PE stocks, and there you will get an operating business which makes sense, and so on and so forth. But if you're more experienced, you can go straight to the dark companies that are there and try to dig for more information and get a sense whether it's interesting or not.
Cool. And yeah, I've also noticed you've also have like price action, right?
Yeah, of course. Yes,
Price
that's
action,
important.
yeah.
We do have price action. That's a good point. So of course, this is probably the most interesting screen, to be honest, in there, because it just tracks various time frames, like 5 days, week, a month, and a couple of others that you can screen for, and therefore, of course, you can just see what's been going on, what's been going up, what's been going down.
And why do you
So yeah,
think
3 months here and 5
because
days.
are you like a momentum investor on the OTC, or you're
I
looking
mean,
for the large down moves?
yeah, I mean, I don't look at charts too much. David does that. David does look at charts and tries to. It's not day trading or anything, but it's more about like spotting companies that have been kind of dying, but they're still operating. So the chart is like going nowhere, but they're still operating, and
It's
so
sort
there's a
of
potential
forgotten,
catalyst.
like people forgot about them, and
Exactly right. So that's one screen that also works there. But me personally, I was just like, I'm used to just going one by one and just trying to understand the situation. And also, if you go on the database, but there's also a trial database that you can kind of see with few stocks. If you go to swendamanual.pythonanywhere.com, there is a trial where you can kind of see how it works, and there's comments for each of the situations, so you get a bit more context as well. So it's not only about having the stock, but then you can also get more research, because you can actually see what we think about the company a bit more, or what we've noticed from the research that we've done.
oh, cool. Oh, so you also put some your notes in there, or your team's notes.
Exactly right. So for each stock, we do have 2, 3, 4 sentences about what has been happening in 2017 and 18, because that's when I read my newsletter, and then in 2020. So we add new comments, and we also add links. So any sort of interesting links that we might find. And again, a lot of these times this can be quite precious, because you can find some further information about a link, or that shares financials, or that shares some sort of fundamental info about the company. So again, these are sourced from our own research about each of the companies.
Cool. Hey, and what about insider ownership? I think that's really interesting. Do you have that that yet, or are you planning on incorporating it, or not so much?
Yeah, insider ownership would work quite well with the SEC stocks. You can of course easily automate that, and it can tell you something. But for the other stocks, that is almost impossible because they would not report it, and so the insider ownership can be very hard to screen. In the OTC space, the insider ownership can be relatively stable, so you can kind of easily tell, what's been the situation in the past few years if you are going to have your hands on the proxy. So it's relatively a factor that I don't use as much in the OTC space, just because there is also not many founders that would be buying their stock or selling their stock. They usually just hold it. In terms of changes in the factors that we
Is it?
see in the public
Are they not
market is not
allowed to buy
as
it? Is it like illegal because they are, if they're not releasing financials? Maybe it will be sort of yeah, it's not insider trading, but it's maybe not
yeah.
so cool if
I
you.
mean, certainly, you have to, regulator would scrutinize it. But since there are not many changes, there's really not been that many cases that I know of some sort of like legal problems with insider ownership. It's rather what they do with the stake than how they acquire it. Of course, pump and dumps, which are frequent in the OTC space and are not in our database. These stocks, yeah, usually they have a lot of changes in ownership or reverse mergers and these kind of things.
No,
But
but
for us, for
sometimes
the fundamentals, not so much.
it just happens to your stock, right? Because um, I just buy some super undervalued well, companies sometimes that are on the OTC or other places, and they'll be dead for years, and suddenly I get like 100% or 200%, sometimes 400% spike in a day, and I can't find anything, no news, and it's only on Twitter or
Mm.
something where there's a lot of people are, it's going up, I'm jumping on this, and I'm like, okay, you can have it. Um, and then I'm like, is there news that I don't know about? I'm always insecure, but
I
sometimes
think a
there's
lot of times,
actually
yeah.
news, but there's a lot of the times it just
Yeah.
happens that there's some pump going on. And
Yeah, or just people that somehow stumble upon it, or I think it really depends. But insider ownership is not necessarily what we're going to focus on, but perhaps volume could be interesting because
no,
volume is
but it's
also
more like because you said like that you don't have to pumps and dumps in your database, but I think it's sort of you can't really avoid it if you just own a
sure.
stock. Somebody in that space, somebody is going to pump it at some point. If it,
Yeah.
yeah, maybe some companies are better targets for that. I don't know. To move on, last time you talked about life insurance company of Alabama. You already briefly touched on it. Is there anything to update there, or not much happened?
I mean, so this is a proxy fight. The shareholders are not happy with how they run the business, the family, and you can
And a
go to
proxy
oddball
fight,
stocks.
that's when you try to throw out the board and install your own people, right?
Yeah, kind of, but I use it now in the sense of just trying to fight the management on some of the issues in the company. It does not necessarily mean that they will be seeking kind of replacement of the board, because maybe they can't really do that because of the voting rights and so on and so forth. But basically, just kind of a situation where the shareholders have resorted to speaking to the management through public letters or through SEC filings and so on and so forth. Here, this is not SEC filing reporting company, but they've been kind of setting up a website where you can go to and you can try to understand what they're aiming for and what they would like to see in the company, and what change would they like to see. Yeah.
Okay, but okay. Cool. And so that launched recently, or?
Yeah, it's been up for like this year, I think even maybe last year or so. But it was really interesting. I think it's good to be keeping an eye on the developments. There've been some ramblings about their financials, which they released so recently, which are not as important. But what has been important is that in July of 2020, the company agreed to repurchase stock from the family of one of the insiders, and the price they paid for it was interesting. Because actually there are two classes of stock listed on the OTC, and so if we take the LINCA as a ticker, the class A, now it's trading at $17 per share. But when they repurchased the stock, the company, they repurchased it for $31, almost $32 a stock in July of this year. So if they're purchasing part of the stock for this kind of money, that really should prompt investors to start looking into it and try to perhaps do something about it, because there could be really upside about how the company is going to run the business and so on and so forth. Because that's kind of straightforward. If they repurchase it at such a premium, that could be interesting.
That sounds interesting. And did it go up since you last were on a podcast, or down, or you don't remember?
Let me see the chart. When was the podcast? It was like, I think
maybe
June, right? Or July?
Yeah, something like that, maybe earlier.
Yeah, it went up a bit, like $3 a share. Yeah, something like that. Nothing too much, but
it's not bad on $14.
Yeah, of course. But like,
it's
the upside
always
or the
better to have
campaign,
FANG, but
sure.
you can't beat it. Let's see. And Altair is also a company you mentioned at the time.
That's a dark one, and that really haven't, there is not much really going on there. The idea is that they have an operating business which is luckily profiting now from the situation, but it is a dark company. They also pay dividends, but rather small ones, and they likely probably.
What does that mean, small ones in this OTC land? Because I've heard of 14 or 15. What's small? Is it like 3%?
3.8% actually. 3.8%.
That's not a small dividend anymore. That's huge.
Yeah, of course.
You're living in 80s.
In a lot of cases that's probably the case with OTC, 80s, 90s, especially some of the websites are specifically built in this kind of ages. So the dividend yield probably got stuck at that time as well.
Dividend. Yeah. So do you have some other, what do you like right now, or what were you really excited about?
I like two stocks. Both of them are oil companies, which is controversial, let's say. But they're both
I've only been losing money there for like, no, not such a terrible industry.
It is, but
I'm so interested. I want to lose more money.
It's special situations a bit, so it is not your usual producers. But the first one is Surgut. It's like this Russian oil giant. There's both a common stock trading OTC and preferred stock trading OTC, and actually I got interested in it during my newsletter times. I just kind of followed it, and there was a lot of times when the dividend yield was like 10 to 15% a year, and of course that was interesting to look into. And then I started researching it, and I actually understood that you can predict the dividend yield before they actually announce the dividend, because how it works is that they report earnings in rubles. And then they have a specific rule on how to pay out the dividends to the ADRs, to the basically preferred shares and common shares on the OTC market. So basically, there is one guy on Twitter who was actually also, he contributed to the research that I recently published in the OTC market. And so he wrote about Surgut, and I think it's really interesting. And basically, the idea is that you keep tracking the results, and you keep estimating the dividend yield. And because there are set rules regarding how they pay it out, you can actually be able to tell what's going to be the return. And this guy, I mean, he's really like only the Twitter is only the results of this company. Like he only does that. It's called Positive Gamma, his Twitter, and
makes total sense. Good.
and he's been putting up like a lot of news regarding it and so on and so forth. And basically the idea is that you just hold it and you collect these dividends, which can be very volatile, but can be very, very interesting a lot of times, because they would just release these huge
And
dividends.
this is a Russian company? Is there like a liquid version trading in Moscow, or?
Yeah, there is, I think, but actually the OTC listing is relatively liquid. We're talking about a stock which is 480 bucks a share, but they have a lot, like I don't know, what was it? Like 100,000, something like that. It's really liquid, so you can kind of get in and out for the smaller investor. And this year in July they released only 8 cents a share dividend, so not so much. But year before that, it was $1 per share. Yeah. So compared to $5, because it's kind of constantly in a trading range. So there you go. I mean, that's 25% right there,
And
or
that's like an
20%. So
annual dividend, or is it like a?
yes, they release it. Release it once a year, and the point is to kind of track what's been going on and to see the company. This is an oil giant. They're really like a huge company, and very important for the Russian banking system to a certain extent as well, because they have a lot of cash, like a lot of foreign exchange, and they do somehow support the Russian government to an extent. There is some political risk for sure, but if you read the research from Positive Gamma in my reports, it's really interesting situation.
And
I like it.
what kind of price to earnings ratio is this trading at? Or you're not
Oh, the price
sure?
earnings, I'm not super sure.
Okay.
I'm not super
Or
sure from top
like,
of my head. Uh, I can imagine being less than 10,
okay,
but because the foreign exchange is changing a lot, so their operating income is like, it's reliant on the USD exchange and also on their results and so on and so forth.
right.
But so far, for example, these guys are not going to be super impacted by the low oil price, because they are, like the classic Russian oil giant, which is just making, like, which is able to have a low. This is not your shale producer or something like that, or Canadian sands. So these are low cost producers.
Yeah, I have some Russian companies. It's actually my energy place where I didn't lose so much money.
Hmm.
Um, and they're really cheap, but that whole market is really cheap. Maybe this is even cheaper. It's an
Hmm.
interesting market, for sure. And
Yeah.
yeah, it's a different political risk.
Yeah.
You can go all in on it, but it's interesting, something to add. Hey, in your database examples, I saw like 3 companies that were trading at a PE of 3 times,
Hmm.
out of 10 companies. Is that like a typical sample, or usually I have to pay up more than 3 times earnings?
It depends. It depends. I mean, usually when I look at them, and I look at the stuff that you mentioned, I mean, one that is like trading at 2.79. This is electronic telecommunications. It's really like a very obscure company that has been operating um, um, uh, various kind of related businesses to telecommunications, and it's really small. It's I think the market cap is very, very small, and it's not really moving much. So there the PE is is real. You can calculate it, but it's not going to be, you pay two times, but the upsides will have to come from something else than just the valuation itself. If you go on their website, it's just like really, really crazy, 90s style website. And also they operate one business which is super funny, which is like, basically they call you and they tell you what's the weather, and that's it. And that's really actually used by some people still. So very obscure. So the earnings that are there, for example, the PE, it can be low, and sometimes it can make sense to buy it just because of the valuation, but a lot of times it's an obscure situation. So that's one example. But there was another one which is very low, and that's kind of good one, which is IC, Alloy Steel International. That's less obscure.
Is
They
that
just
the other
produce like,
company you wanted to talk about, or?
No,
Oh,
actually, the other one was, but I can just quickly give this example. It's like a
sure.
mining company. They do mining equipment. Mining equipment, and they've been, undervalued on the book and also on the earnings. So that's, for example, a company that you could buy for the valuation and understand the situation a bit more. So it's not necessarily as, telling whether the PE is low, whether there's going to be some sort of move there. But you can find certainly low PE
Cool. And
stocks.
can you see in your database like what the average PE is for the OTC stocks
Mm-mm.
that you think that are interesting? Or?
That's cool. I haven't thought about doing that, but we should do that. That's a pretty cool thing. Of course, for some of the companies, like for 50 or 40, we don't have all the financials, so we don't show the PE for some of them.
No, but it's the
But
same
that could
thing
be
with
interesting.
S&P. Some have like negative earnings, and then I think it doesn't
Mm.
count or something, or they
Mm-mm.
have a way to adjust it. So maybe you could use the methodology that's used for
That's pretty
ETFs
cool.
or
That's a
something like
cool
that.
idea to actually, yeah, like Svenda's index, like the Schiller PE index, the OTC
Yeah,
stuff. That's
yeah, and
pretty.
publish it
That's
from
pretty cool.
time to time. I think there will be great
That's cool.
PR for your database. And
That's really
yeah,
cool. That's a really cool idea. Thanks. I
um,
will take that in mind.
let's see. Oh, you had one more company that you wanted to
Yes.
talk about,
Yes,
right?
another oil stock, which is a bit less of a dividend play, and that's Reserve Petroleum. So it's RSRV. The shares are about $135 now, so it's a bit higher priced, but interesting in my view because they've been able to make money or generate positive cash flow even in the current oil price. So Q2, they were SEC reporting company, so it's relatively clean, no kind of OTC craziness to a huge degree, and they've been able to be cash flow positive in the Q2. So even when the oil price was really getting low, they were still able to generate money, and they have a huge cash position.
Oh, okay.
So they have
And
about, yeah, they have about, let me just get the research that I've done in early September, just to be completely precise. In early September, basically the market cap was almost only the cash pile, and you would pay for the cash pile, and anything above you would get for free. So they have like cash and T-bills and treasury bills on their balance sheet, and they're still generating cash flow, even though it was like 600,000 or something like that. So not like crazy amounts of cash flow, but per quarter, yeah, which is not too bad to be in my opinion. They're still able to make money even in the current oil price system, and
so do you
their
have
balance sheet is like super strong.
any idea what kind of like through the cycle earnings yield it trades at, or like total
Um,
shareholder yield or something like that?
yeah. I mean, through the cycle, that's a good question. I don't think that I have that on top of my head, but
No.
just more kind of like, I know that they've been profitable a lot of times, and I've been looking at them for a lot of time, for a long period of time to buy it. But basically, it was trading slightly above the tangible book, like about the net cash and so on and so forth. And so I was like, since it's kind of sleepy, might not be that as interesting. But then in COVID, they start to really decline, and they went from like 220 to like 100, almost 100, 110. And that's where the valuations start to be like, well, but wait, I mean, you really buy the cash. They haven't been really doing much with the cash, so of course it's not ideal, but you have a quite a large margin of safety, and they're still able to create cash flow in the current oil price. Interesting.
Right, so they got really crushed in March, and they haven't really recovered. While
No, yeah, yeah,
yeah, some energy companies have actually recovered quite a bit.
yeah.
Yeah, could be maybe a risk that they shut in some wells because some point there was like overproduction.
They
That would be,
certainly, they took a hit. Yeah, they took a hit on their income statement because they wrote off some of their OG assets. But it
yeah,
wasn't like a large part of it. And yeah, of course, to be completely precise
yeah.
with the research, you would want to do the well analysis and try to understand like where are they drilling and what could be the life expectancy. But if they keep on producing the positive cash flow, I think it's worth really trying to understand what's going to be the next thing for them.
Yeah, and the valuation changed a lot, and there's a lot of cash. It sounds really interesting.
Mm-hmm.
Jan, I don't want to keep you any longer,
Sure.
because you've been great, and very generous of you to come on again and talk to us about these super small but very interesting companies. Where can people find your database, and where can they find you and follow your work, or
you can go to
send you a message?
svendamanual.com, where you can buy the access to the database. You can buy my past research. So I've wrote
Okay,
something in 2020 with some other OTC guests as well. And then you can get the access to the database there as well, which is hosted on a different platform. That's probably best to keep in touch regarding the OTC stuff. So there is also an emailing list that you can sign up to receive any updates about what we're going to do with the OTC product. And then, of course, on Twitter, you can find me under my name, Jan Svenda, and you can kind of see what I post from time to time. Not as active, but I do post about OTC and short selling.
Yeah, and you'll be posting like the average PEs of the
Sure.
soon, so that's cool.
That's great. That's a great idea.
Maybe, create an index, license it. So thank you so much. This has been great. I'll put all that in show notes. Great to have you, and see you next time. Okay, and I'm back. That was another super enjoyable interview to me. I liked it so much. After the interview, Jan gave me a discount code that you can use when you check out on his site for his database of over-the-counter stocks. Coupon code is BRAM. Use that and you get a 15% discount. The other important thing is, please like, subscribe, and share this video. Really helps me a lot to convince guests that people are interested in what they have to tell, and often obscure companies or ideas or subjects. But it goes a long way, so please do that, and see you next time.